Hello everyone. Tired of your money just chilling in your savings account, earning interest that barely beats inflation? What if I told you there's a new favorite in town that even your conservative uncle and your crypto-loving cousin can agree on? Yes, it's retail bonds. And no, they are not as boring as they sound. Stick around, we are breaking it all down for you in a markets for you style. Retail bonds are quietly becoming the new go-to for everyday investors. Just in financial year 2024, retail participation in online bond platforms shot up by 30 to 40%, and total investment volumes on those platforms soared 60 to 80%. That's not just a trend, it's a shift. Turns out, more and more everyday investors are waking up to the idea that bonds aren't just for big institutions in shiny offices. So what's changed? Accessibility, technology, and user-friendly platforms have made bond investing as easy as ordering groceries. No intimidating paperwork, no need to visit a bank branch. If you have got a smartphone and an account, you are halfway there. So let's talk returns, because that's where retail bonds really shine. In 2024, Adani Enterprises launched its first ever retail bond issue with coupon rates ranging from 9.25% to 9.90%. Compare that with your average fixed deposit giving around 6 to 7%, and suddenly bonds start to look like the smarter option. And here's the bonus. Bonds tend to come with lower volatility. So if you're tired of your stock portfolio swinging up and down like a reality show plot or like an Ekta Kapoor episode, bonds can offer some much needed stability. Now here's the game changer. In 2024, SEBI made investing in privately placed bonds more inclusive by cutting the minimum investment from 10 lakh to just 10,000. That's right, a 99% drop, making it accessible to a whole new segment of investors. Plus, the RBI's Retail Direct scheme, launched in 2021, is now gaining real traction. It allows retail investors to buy government securities directly, and over 2 lakh people have signed up already, with investments exceeding 2,200 crore. That's a big green flag for public interest. If your portfolio feels like it's constantly in crisis mode, adding bonds might help balance things out. Bonds act like the steady anchor, offering consistent returns when equities get unpredictable. Currently, Indian retail investors are allocating 15 to 20% of their portfolios to fixed income instruments like bonds and FDs. It's not about playing it safe, it's about adding stability to your financial strategy, especially when global markets are operating with such volatility. Think the bond market is small? Think again. As of September 2023, India's bond market was worth a staggering 2005 lakh crore, with 161 lakh crore in government bonds and 44 lakh crore in corporate bonds. This is a serious space with serious growth. And as platforms and regulations continue to evolve, it's becoming more and more retail friendly. Retail bonds are great, but like any investment, they come with their own set of considerations. Always check the credit rating of the bond. AAA is a top tier, and understand who the issuer is. A higher return might look tempting, but if the issuer has a shaky repayment record, that's a red flag. Also, pay attention to the interest rate environment. Rising rates can affect bond prices. So as always, do your homework or speak to a trusted advisor before diving in. So are retail bonds for you? That's a decision only you can make. But now you know why they have become one of the most talked about low-risk investment options in India today. With low entry barriers, attractive returns, and increasing accessibility, they are definitely worth considering. If you found this video helpful, hit like, subscribe to Markets for You for more grounded financial insights, and drop a comment if you have explored bonds or are planning to. Till then, stay tuned and stay safe.